As a cannabis business operator, you understand that cash is the lifeblood of your company, and it can be incredibly overwhelming when having to manage that balance so tightly. So in this two-part video series, I'm gonna walk you through a framework on how to prioritize your cash, as well as how to cut costs without losing productivity so that you can sustain your business during these challenging financial times. Now, if you need help with optimizing your cannabis business to generate more profits, then please schedule a free consultation with our team by visiting our website at greengrowcpas.com or give us a call at 800-674-9050. Let's jump right in. So what should you consider before developing a cash flow plan? Well, first, what is the stage of your business? Because during the startup phase, it's normal to see negative operating cash flows and negative investing cash flows and positive financing cash flows. Now, you may even see the first few years with operating losses that result in negative cash flows while your business experiences continued expenses and very little revenue. However, if you're in the growth or later phases and would be considered a mature cannabis business, then cash flow issues need to be examined in great detail. Now, it's essential to analyze the gravity of your case relative to your business stage and work out your cash flow accordingly. Second, you need to understand how bad the problem is. What is the reality of the situation? Are you just bleeding a little bit of cash, or are you hemorrhaging funds everywhere? Is it so bad that you need to look into a business sale or scale down your operation? Or are you in a good position and just need some business guidance on the next steps to optimizing your operation for cash efficiency? To understand the gravity of your cash problem, you need to review accurate financial statements, get down into the details, and make an educated assessment of your cash flow. But either way, remember to be honest with yourself, your team, and your investors. Optimism is great, but delusional optimism is deadly. Next, let's develop a cash flow plan. Now, if you believe your financial problems are fixable, then it's imperative to review how to utilize your cash on hand. So first, we're gonna go over a suggested framework around expenses to prioritize. So let's just get right to it. Priority number one is gonna be allocating for your upcoming taxes. Now, we recommend never ever using your tax money as operating capital. Simply just put it in a separate account and do not touch it. Now, if you use the tax money to finance your business, then you run the risk of not making that money back in time to pay your taxes, and that can ultimately end up in a worse position for your business. There can also be huge penalties and interest assessed to operators for late or missed payments. In states like California, operators face penalties and fines as high as 50% of the original tax bill, and criminal charges of drug trafficking can even be brought up against operators for non-payment of taxes, and you could lose your license. Now, as a good practice, we recommend asking for and retaining receipts for all of your taxes paid, especially when paying an outside distributor or someone who is not a government entity. For example, in California, cultivation tax is paid to distributors, and therefore, to keep adequate records, operators should be collecting receipts from each distributor that they pay. Priority number two is payroll. Now, cannabis companies succeed when their team is aligned and enthusiastic about working together to further the company's mission. And the fastest way to destroy your team spirit is not to pay your employees, even by a day. One payroll period that gets missed could signal to employees to look elsewhere for employment, and it could build resentment among the staff and your other associates. So pay your people on time as promised. Priority number three is secure debts. Now, many cannabis operators purchase equipment and other significant expenses using secure debt. Now, under this method, if you miss a payment, you risk losing that income producing asset that you need to operate your business. Examples include your extraction equipment, the mortgage on your property, and even financing the grow equipment. Priority number four is going to be rent and utilities. So make sure you can still afford to keep the payments current on your space, as well as the vital utilities that keep your business operating and open. Licenses are often tied to an address, so losing your space could mean losing your license. Now, further, late or missed payments on rental agreement contracts can be egregious. So this is why we always recommend making your rent payments on time as specified in your contract. Now, if you have a good relationship with your landlord and are low on cash, consider reaching out to them to develop alternative ways to either delay payments or offset costs by offering some other type of consideration, such as equity in the business. For cultivators, missing utility payments can cause a hiccup in your service, which could then lead to crop failure failure or increased rates or deposits going forward. And if the debt is even high enough, you could lose service entirely and have to pay the whole total amount owed before the utility companies will reinstate your service. Now, priority number 5 is paying your critical vendors. Maintaining a solid relationship with vendors is vital to keeping your operation stocked with the latest and most popular products. And late or partial payments can cause distributors to decline to work with you at all in the future. Now, while we always recommend staying current with all of your debts, be sure to prioritize vendors that you 100% depend on to stay in business. Look, business owners talk to each other, and while you may think you can just work with another distributor, the word gets around quickly and it spreads that your, untimely payment history is kind of coming up often. And also, some distributors have exclusivity agreements with top selling brands that cannot be purchased elsewhere, so stay up to date on those payments. Priority number 6 is insurance. Now, because the industry is still so new, insurance contracts and stipulations should be reviewed on a case-by-case basis. You typically receive a grace period if you're late on premiums in traditional sectors, but that may not be the case with your general liability, your product, or even your vehicle insurance for a cannabis business. So it's critical to know how late payments can affect your coverage. A lapse in insurance can have many adverse effects on the sustainability of your cannabis business. So make sure to pay that insurance premium. And priority number 7 is going to be other bills to keep in mind. Now, these include non-critical and current invoices, as well as unsecured debt and credit cards. But be careful with your personal liability exposure. Missing payments damages the business and could adversely affect and impact your personal credit, preventing access to future borrowing needs in the future. And lastly, if you have extra money, think about a rainy day fund or an emergency fund. Now, thank you for taking the time to watch this video, and I hope it's brought you some value and understanding around how to prioritize the cash in your cannabis business. Now, the second part of this framework is in a separate video on cutting costs to relieve the pressures on your business. Now, if you need help with this or anything else related to the financial performance of your cannabis business, then please schedule a free consultation with our team by visiting our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon.